Okay, so you want to talk gold IRAs. Let's dive in. We're talking about an asset with a history as old as civilization, right? And you want to know if it has a place in your retirement portfolio.
It's certainly a fascinating way to add diversification, that's for sure.
Right. And you sent us a whole stack of articles, brochures. It seems like everyone's promising retirement that glitters.
Yeah.
But you want to know what's really there beyond the sheen.
Exactly. Understanding the nuances of any investment is crucial, and gold is no exception.
Well said. So, for anyone joining us who's new to this, let's clarify. We're talking about a specific type of individual retirement account. Just like you can hold stocks or bonds in a traditional IRA, a gold IRA lets you hold physical gold.
And that distinction, physical gold versus a paper asset, that's at the heart of both the appeal and the important considerations we'll unpack.
I love how you put that. Speaking of appeal, one article, 8 Benefits of a Gold IRA, really zeroed in on gold's performance during those market free falls. Like, back in 2008, they say when the S&P 500 tanked over 50%, gold actually went up by about 25%.
Yeah.
That kind of stability must be music to an investor's ears.
Right. It's a compelling point for sure. That specific period, it really highlights gold's potential as a hedge against inflation and economic turmoil. See, during times of uncertainty, traditional markets, they can become very volatile. Investors get nervous, and that fear, it can snowball.
And that's when they start eyeing that gold brick, right?
Exactly. Gold is seen as a safe haven because it has intrinsic value. It's tangible. It's finite. It can't just be printed more of like currency. Mm-hmm. Historically, it's held its value over very long periods, which is incredibly appealing when everything else feels shaky.
It's like that old saying, right? Go for the gold. But it takes on a whole new meaning when we're talking retirement. Yeah. This tangible asset thing, it really seems to be resonating with people. The article, it mentions it's almost like a psychological comfort in our increasingly digital world.
Absolutely. Yeah. With stocks and bonds, your portfolio, it exists as digits on a screen. But gold, you can hold it in your hand.
Yeah.
That tangibility can be very grounding for investors, especially during times of economic uncertainty.
Okay, I get it. Yeah. But before we all go digging for buried treasure, you mentioned there are downsides too, right? Risks to consider with gold.
Right. It's important to remember that gold, it doesn't generate income like a dividend-paying stock or a bond. And while its price can appreciate, especially during market downturns, it can also be volatile. Remember, gold prices, they're subject to market forces too.
So no guarantees, just like any other investment. Okay, so let's say someone's hearing this and they're thinking, a gold IRA might be right for me. What's next? This article mentions different types. Traditional, Roth, SP. We're talking about different carat values here or something?
Not quite. Those are actually different types of IRA accounts that you can use to hold gold, each with its own set of rules and tax implications. For example, a Roth IRA, it uses after-tax dollars. So withdrawals in retirement are generally tax-free, while a traditional IRA uses pre-tax dollars. So you defer taxes until retirement.
Ah, okay. So the type of IRA you choose really depends on your personal financial strategy and when you want to access those funds.
Exactly.
This is where it gets interesting, right? It's not just about the gold. It's about how it fits into your bigger retirement picture.
Precisely. And that's why it's crucial to understand the nuances before jumping in.
Absolutely. Speaking of jumping in, the article, it throws around the term custodian a lot. They make it clear you can't just stuff gold bars into your mattress, which is a shame. I just bought new linens.
Right.
But seriously, what's the deal with custodians?
It's all about IRS regulations. You see, the IRS has strict rules about how and where gold in an IRA can be stored. Custodians are specialized financial institutions that handle all of that. They ensure your gold is stored securely in an approved depository and that all the IRS regulations are met.
So it's not like calling up a gold dealer and having them ship you a box of Krugerrands.
Definitely not. This is where due diligence is essential. You need to thoroughly research potential custodians, compare their fees, scrutinize their storage procedures, and make sure they have a proven track record of security and compliance.
So it sounds like choosing the right custodian is just as important as choosing the right gold for your IRA.
Yeah, it's a critical decision, no doubt. Think of it this way. You wouldn't entrust just anyone with your retirement savings.
Right.
You'd want to partner with someone who understands your goals, communicates clearly, and prioritizes your financial well-being. Finding a custodian, it's no different.
That's a great point. So for someone listening who's thinking, all right, a gold IRA might be a part of my retirement plan, What's the most important thing they should take away from our deep dive today?
I'd say it's this. Knowledge is your most valuable asset. Just like with any investment decision, right? Understanding the why behind your choices, it's paramount. Don't let yourself be swayed by, flashy promises of instant riches.
Right, right. It's about taking control of your financial future.
Precisely. Whether you ultimately decide a gold IRA is right for you or not, what matters most is that you're making informed decisions. And that's what we hope this deep dive has equipped you to do.
Absolutely. We've just scratched the surface here.
Yep.
And we'll be sure to include links to all the resources that we mentioned in our show notes for you to explore further.
And remember, diversifying your retirement portfolio across different asset classes, it's rarely a bad idea. Gold can play a role in that diversification strategy. But always consider your own personal circumstances, your risk tolerance, and your long-term goals.
Couldn't agree more. Well, another fascinating deep dive in the books. Until next time, everyone, happy investing.